But let's keep it then with the auto spaces, specifically in the tractor front. Escorts delivered a strong set of November sales as well. Total tractor sales jumped 56%, and it was a 28% beat, in fact, on street estimates. We have Bharat Madan, Group CFO at Escorts, joining in. Thanks very much. As always, good to talk to you, Mr. Madan. First off, if you could take us through these numbers. Your total sales, of course, saw an uptick about 29%. We've also seen a fairly strong traction across the board. Take us through some of the growth drivers here.
Yeah, I think it has been pretty strong here. If you look at the month, I think we grow almost 55-56% this time compared to last year. And also one other reason has been the shift of its season, the festive season compared to last year. But having said that, I think the strong market where we have been operating, especially in the north and central India, so all the markets have done extremely well in this period. So it's coming on the back of a very strong crop from the kharif season, and we are looking at the rabi season likely to do well. So we think the momentum, I think, in the coming 2 quarters should also continue to be good for this industry.
We're clearly seeing, tractors performing other segments, the rest of the auto sector as well. What would be the number then that we can expect to see in terms of growth going into the end of the year as well?
See, I think for the company, for the industry, we're looking at 12 to 14% sort of growth. I think if you look at the YTD numbers so far, the first 10-11 months, for the first few months, until November, the industry has shown 14% growth roughly, and we have gone close to 25%. And we expect the momentum for Escorts should continue. So while the industry probably will grow at 12-13% on a full year basis, the growth is likely to be 20% plus on a full year.
All right, on the margin front as well, the company had guided for about approximately 100 basis point margin improvement this year. It has come in fact, slightly higher than that. Could you give us a sense of if this guidance will be revised? What is the expectation on the margin front?
So I think if you look at the first 6 months, obviously the margin improvement has been much better with coming on a very low base. But going forward, I think the next 6 months, the second half was pretty strong. So base is already very strong for us compared to the last year. So there the margin improvement is slightly under pressure. But I think we're still trying to maintain the margin guidance for the year for full year and try to still deliver on 100 basis point improvement at a company level.
All right. Did you face any kind of an impact of, we were talking about this earlier as well, in terms of the entire liquidity crunch at NBFCs? Which part of your business did it impact? Was it more the construction business?
Yeah, so tractors don't see really much impact coming in on the financial side. But in construction, there have been a bit of an impact on few NBFCs, I think, which has slightly deferred the payments, especially for the equipment supplied by us. So, but that's not very significant. So it's only, I think, it's like few NBFCs which are really getting impacted. But generally, I think on the ground, we don't see really a significant impact on the financing issue. That's more.
All right. So going ahead, then no lingering effects is what we can expect. In terms of your construction equipment business, in fact, second quarter was clearly strong. Volumes, revenues, both delivered. Going ahead, what is the kind of outlook that you have? What are the trends that you're seeing on the ground?
So normally S2 is a very strong period for the construction equipment division. So we expect, I think the numbers should look good. So I think whatever growth momentum has been there in the first half, so we expect, I think the momentum should continue. So we are still looking at 30% plus growth happening on the volume front on the construction equipment business side on a full year basis.
All right, just a final word then on the rural side of things. What is the expectation on the demand front? Because we've seen about 1.5 seasons of strong agricultural performance. How do you see that playing through to your business? And then, of course, keeping in mind the fact that we're going into a very politically uncertain time, election season. Generally, what is the kind of impact that you see? How does that factor in then for your tractor business?
So generally, if you look at the past trend, obviously pre-election year, you see very strong growth coming in, which we are seeing it's in third year, and the industry has been doing well, and we're seeing a good growth momentum continuing here. So we expect, I think this rabi season is also likely to be good. So at least till Q1 pre-election period, I think we expect the growth momentum should continue. And after that, there are a lot of uncertainties around the monsoon, or will pan out, with the El Nino effect will happen, and the elections coming in. So maybe a few months of early stagnancy may set in, I think, in the industry, but I think we still expect overall if the market happens to be good, you may see another strong year coming ahead next year too.
All right, thanks very much. Appreciate your time. That's Bharat Madan, Group CFO at Escorts. Total tractor sales, in fact, seeing an uptick of about 56.5%, coming in above 8,000 units for the month of November. It's a 28% beat coming in on estimates. Domestic tractor sales similarly seeing very strong growth, and exports also delivering. So it's up 2 times, coming in at about 364 units as well. That's the view coming in from Escorts for you. But overall, undoubtedly, the auto sector has been facing its own share of challenges, a weak festive season, and of course a slowdown in retail sales. The focus has now shifted to market leader Maruti Suzuki.